that. So yeah, I ain't gonna lie, this is gonna be a pretty good training. I ain't gonna lie. I'm definitely recording this one. It'll be in the chat, in the new chat for sure. But I'm definitely about to go over a lot of stuff. Give me one more sec, real quick. And let me know if you can see my screen. Let me know if you can see it. Just want to make sure you can see it before I get started. So, all right. And so what I'm gonna basically going over is one, support and resistance, because that's gonna be huge in this. And one of the things that I'm gonna be going over, um, having like these major support and resistance lines, also known as supply and demand zones. Um, it's going to be real big when I get to a certain point of the training. And then also going over the strategy that I went over before, but going over it off of the 5 minute. Um, I've been liking it a lot more. So I'm going to be going over my stack strategy on the 5 minute. Um, and then also showing how you can catch one, multiple entries off of it, but then also two, catch swing trades off of it, right? And so just off of just curiosity, how comfortable are you guys on a scale of 1 to 10 with support and resistance? Let me know. We are going to be going over Nas, but I'm going to do it on a different chart. On a scale of 1 to 10, how comfortable are y'all with support and resistance? Turn off these waves too. All right, back. And so when it comes to this, we're going to be looking at the 4 hour and the daily, right? When it comes to these major support and resistance lines, right? Or zones, actually. But what I want you to do is I want you to start off on the daily, right? And from the daily, I want you to go to, your line chart. So the line chart is going to tell you exactly where those candles close, right? So for example, if I was to put a horizontal line right here, you will see, this is where the candles close. But if I were to go to a candle chart, you would see that there's wicks above this line, right? So the line chart basically just gives you literally where the candles close, basically, a more accurate support and resistance, I guess you can say, of a zone, but we also would still pay attention to those wicks when we are trading, right? And so the first time frame that you're going to be looking at is the daily, in which you will want to zoom out pretty well, right? And so what I'll say to do is, you're fine, your line, and you'll decide, what color you want it, right? So for the daily, I'm going to use a white line. All right. And so what we're going to be looking for are for areas that have multiple touches, but then also areas where I'm gonna just kind of draw it out. Also areas where, it may be a resistance at one point, but then later on it may be a support, right? So you see that? So how it's a resistance, it breaks through, support. These are going to be the areas that we like a lot more. Yeah, we're going to find some that might just be a support, and then go the opposite direction. But when we can find areas that are supports and resistances, um, those are going to be a lot more um, better targets for us when it gets to the point where I'm explaining that. So let me clear this off really fast. And so, but we're on a daily, and Like I said, I'm gonna have my daily lines as white. All right. And so what I'm looking for, I'm gonna zoom out for areas where you're getting multiple touches, sometimes as a support, sometimes as a resistance, right? And so what you would do is you'll find a little area and see where you have those type of situations. So for example, on this first line that I placed right here, as you can see, we have a touch here, we have a touch here, we have a touch here. We're getting multiple touches, right? We are getting multiple touches over and over and over of this zone, this line, this support slash resistance. All right, drop a 2 if you're seeing that, just so I can make sure you guys are keeping up. Drop a 2 if you are seeing what I'm saying. Just want to make sure that you guys are understanding. Perfect, perfect, perfect. So these are, you're going to see this over and over and over again, but you want to try to find, obviously as many as possible. Now, there's going to be situations, right? There's going to be situations where it might not completely touch it, or they might overlap just a tad bit, and that's fine. All right. And so you're going to just continually make these type of lines. So you're going to continually search. As you can see here, we have touch here, right? And touch here. All right, so you're seeing, we're getting these multiple touches, and I'm gonna show you how it looks on mine. You're gonna be like, dang, that's a lot of lines. And that's how it's gonna end up looking eventually. But let me go back. But I just want to show you guys how we're placing these lines. Like I said, we're gonna start off on the daily, and then we're gonna get to the 4 hour. Let me delete these circles really fast. And we're going to continually do this over and over again so that you can see these zones. Because these zones, these areas are going to be potential swing take profits. All right. They're going to be potential swing take profits that we're going to use in the future. All right. And so you see, we have this touch here, touch there, touch there, touch here, touch there, a small touch here. And we're getting these over and over and over again. So we're literally just trying to find these little zones where we're getting multiple touches. All right, we're getting multiple touches. Obviously, this is an example of where it was just a support. Now, if we went farther back in time, we'll see at some point it was some type of resistance as it rejected there, pulled back and then broke through. But if you're getting multiple touches like that and it's a clear support, obviously, we're going to want to add that as well. All right. We're going to see here. We're going to mark up quite a few areas, and I'm going to show you quite a few examples of how we're going to use this. But I first just want to show you guys how we're going to be placing these lines. How we're going to be placing these lines. So let me put a couple more in here really fast. So like I said, you can zoom back and really, get a good little look at, what the market is doing, what areas, definitely gave you that. And so let me put a couple more in really fast. All right, boom. So we got, these are our daily zones, right? Our daily support and resistance areas that we will use, like I said, for our swing trades. This one, last one. Now we'll go to the 4 hour, in which now you will use a different color. All right, you're going to use a different color. And so instead of using white, I'm going to use yellow. Just put a line so I can change the color. I'm going to use yellow, right? And so now we're basically doing the same thing, but on the 4 hour. All right, so you see rejection there, bounce off here. You're going to see it over and over and over again. And now you're also going to see that sometimes the 4 hour matches the daily, so you don't have to overlap those lines. You don't have to put a yellow line over the top of a white line. Just having it that one time is perfectly fine. We're just trying to find some on a different time frame. Um, yeah, on a different time frame. As you can see right here, we got this rejection here and this rejection here. And I'm gonna show you guys too when we get back to the candlesticks, how you're gonna see it just rejecting and respecting these zones as well. And you're gonna be like, okay, I'm understanding it a lot more. So you'll constantly just look for those areas over and over and over again, and you'll mark them up on your chart. Like I said, eventually it's going to look something like this, and you're gonna be like, that's a lot of lines. But you may look at it right here and be like, that's a lot of lines. But then when we're looking at it on the strategy that I'm going to be showing on the 5 minute, you're going to see it's big gaps in between these lines. You know what I'm saying? Drop a 3 if you see that. How big these gaps are in between each of these lines. Drop a 3 if you're seeing that. Perfect, perfect, perfect. And so what I'm going to do, let me go back to the chart that we were just using. Actually, I can stay on this one. All right, what I'm going to do, I'm going to 4 hour, and I'm going to go to the candles, right? And I just want you to see how it's constantly respecting these zones, right? So, rejects it, reject it, reject it, reject it. Rejection breaks through, comes just short. But you're seeing it's rejecting these areas over and over and over. Again, like I said, we're going to be using this when it comes to, especially when it comes to the swing trades off of the 5 minute, right? But is this making sense? Is this making sense? Let me know if this makes sense so far. But I definitely just wanted to start off with the support and resistance first, just so y'all know how to mark it up, how to set it up, and all that type of stuff. All right, perfect, perfect, perfect. So now that you guys know how to do set up your zones, and we're gonna get into the strategy. After I go over the strategy, the regular part of the strategy, I'm gonna show you guys how to use these zones to catch swing trades where you're catching moves that can potentially be, for example, from this area all the way up here, which is like a 3,000 pip move, right, within a day, right? But then also catching moves in between here that you're securing profit from, okay? And so when it comes to this strategy, there's going to be certain things that you are going to need to see, right? And so one, you're going to have to add these certain indicators, right? So the indicators you are going to need, we're going to start off with the EMAs. We need the EMA 4, EMA 200, EMA 400, and this is on the 5 minute time frame. EMA 2400. All right. These are going to be the 4 EMAs that we're going to be using. All right. The 400 is going to be for the swing trades. But the main ones we're going to be really looking at is EMA 4, the 200, the 2400. All right. So those are going to be the EMAs you're going to need. Next, you're going to need 2 sets of CCIs. You're going to need the CCI 6 and the CCI 50. All right, CCI 6 and the CCI 50. And then if you can, let's say you do have the pro version of TradingView, you're going to want this right here, the trade, the support and resistance levels with breaks, LUX, right? You're going to want that one. All right. And I'm going to tell you, the settings for that as well. And so for that, you're going to want 9,920. So what I'm going to put right here is support and resistance. The Lux one. The settings are going to be 9,920. All right. Let me know when you guys have that. Now, on if you have it on MetaTrader, you won't have this. But those are basically, this is basically an indicator that will create your smaller support and resistances for you. Um, so you don't have to do as much work on your own, marking those up on your own. All right, drop a 5 if I'm good to continue. Drop a 5 if I'm good to continue. So let me go ahead and add these to my screen really fast. 200, 2400, and this. All right, done. So whatever colors that you make your um, EMAs is completely up to you. And actually, I'm gonna go to a chart with none of the vertical lines just so I can have a clean um, look, so you guys aren't too distracted with all the stuff on the screen. Um, so I'm gonna go to this one, and then the drawings. And so when it comes to this strategy, right, there's going to be certain rules that we use, right? And so I'm actually going to add these um, rules to the screen. Give me 1 second. The buyers and the sellers. All right, so these are going to be the buy rules. And then we add the sell ones as well. And I'll go over to the swings after that. We're going to start step by step. So boom. When it comes to this strategy, there's going to be certain things that have to line up um, before you enter a buy or before you enter a sell. Okay. So for a buy, our forward EMA is going to have to be above the 200 EMA and the 2400 EMA. Okay. For a buy. If you do not see this, we will not be buying. All right. Also, our CCI 6 and our CCI 50 must be above 100. All right. So you can see these numbers here. If these are both not above 100 at the same exact time, well, I don't have to say at the same exact time. If they're not above 100 at the same time, they don't have to do it at the same exact time. But if they're not on above them at the same time, then we're not looking for a buy. And then also, if it's a resistance, which you see is this red line, if you have those indications and it's a resistance right here that hasn't been broken and it's real nearby, we're not going to be entering a buy. I'm going to be giving you guys multiple examples. So don't worry. And then the sell is vice versa. So definitely write this down if you haven't. Take a screenshot, whatever you have to do. Do that. Where did I just do with it? Oh, here we go. But let me know when I can continue on. Let me know when I can continue on by dropping a 7. So write that down, screenshot it, whatever you got to do. But drop a 7 when you're ready to continue, so I can give the examples. Drop a 7 when you guys are ready. And so the reason for the 2400 EMA, I know y'all probably like, dang, 2400 is basically the 2400 EMA is what would that be on the 1 hour? That'd be the 200 EMA on the 1 hour. Yeah, that'll be the 200 EMA on the 1 hour. So um I always look at the 1 hour. You should just look at the 1 hour and use the 200 EMA to tell me what trend it was in. But it literally matches. Like if I was to draw out this line, which I'm going to do just to show you really fast. If I was to draw out this 200 EMA with this yellow line here, and I were to go to the 5-minute chart, you're going to see that my 2400 EMA is exactly that. You guys see that? So basically, it's just to just tell me easier without having to switch time frames to see what trend is in. Is literally just telling me that on the 5-minute, right? So that's the reason why I have that um, that EMA is basically telling me what trend is in. So that 2400 EMA is literally going to be telling me whether or not I'm looking for buys or sales, right? If if I don't care if every other confirmation is going for a sale, if the market is above this, if the 4 EMA is above this 2400 EMA, and everything else is giving confirmations for sales, we are still not selling because it is not aligning up with these rules. Okay. You have to let it follow up with these rules. All right. So what we'll see is I'm gonna find some good examples. We're gonna start off with some buys, right? So what we'll see is we have this resistance. We have this resistance here, and we have a break. Not only do we have a break, but we also see our CCIs are both above 100. Do you guys see that? Both our CCIs are above 100, right? So we have the 4 EMA above the 200 and above the 2400, which is my blue line right here. So these are all the confirmations that we need to see for us to enter a buy. Yes or no? Let me know in the chat. Our 4 EMA is above the 2000 and the 2400. And then also we have that break of that resistance, and our CCIs are both above 100. Are those all the confirmations that we need? Yes or no? I meant to say the 200 EMA, sorry, not the 2000 EMA, the 200 EMA. Yes, right. And so boom, we enter that trade. The trade goes up 2,900 pips. And I'm looking at the wrong time frame, so let's rewind. But we're still going to use the same situation, right? So we have that break. Everything is above still. We're in a 5-minute. Everything is above still like it needs to be. We enter this trade. After an hour is up 500 pips. And after 6 hours is up, it's over 1,700 pips, right? But we're literally going to be seeing this happen over and over and over again, right? So we have our break. Everything aligns up. Our 4 EMA is above our 200 EMA, which is my pink line. And my 2,400 EMA is way down here. So we're definitely in the uptrend. So we're only looking for buys, right? We enter the trade. Boom, it goes up 300 pips, right? 300 pips. Another example. We have our break. Everything that lines up. 4 EMA above our 200, 4 EMA above our 2,400. We buy. It goes up. Is this making sense so far? Let me know if this is making sense. Let me know if this is making sense. Perfect, perfect, perfect. So now I'm gonna give you examples of sales. And then I'm gonna give you examples of Okay, I'm gonna give you examples of sales. I'm gonna give you, where we're gonna be looking to secure profit, where our TPs are gonna be, and then I'm gonna show you guys how to stack your trades. All right, how to stack your trades. All right, and so boom, examples of sales. I gotta go back until our forward EMA is below 2,400. I want to find some super good examples. A second. It's been trending up for a while. All right, so boom, we come over here. We see our forward EMA is below all the other EMAs that it needs to be. It breaks the 2,400, the 200, and we're good, right? So boom, we see the support here. We get our break. Our CCIs, both our CCIs are below 100. Again, for a sale, it drops, right? You see it again, it breaks, it drops, right? As long as everything is aligning up, we're looking for entries. We're looking for entries. We are looking for entries, right? So basically the same thing, just the opposite direction when it comes to buys and it comes to sales, right? Now, when it comes to these 5-minute entries, right, and I'm gonna tell you why the TPs are going to be pretty quick, and why we're going to be securing profit quickly is because I'm going to be showing you guys how to stack your trades, which means you're going to have multiple trades open potentially at once. All right. So when it comes to the stack strategy, other than when I tell you about, the swing method of it, when it comes to the stack strategy, geez, I was just studying. We're going to only be looking for trades between 3 a.m. and 2:45. Okay, 3 a.m. I mean 3 a.m. and 2:30 p.m. 3 a.m. to 2:30 p.m. is going to be our trading range. All right. Also, when it comes to the strategy, we're looking to get quick, fleet in and out of trades, right? So there may be times where it may be an hour or 2 hours before the trade gets there. But we're going to be going for 300 pip take profits and 300 pip stop losses. All right, 300 pip take profits, 300 pip stop losses. TP 300, stop loss 300. Now, also with this, we're going to be looking to secure profit a lot earlier. Now, drop a 1 if you have problems securing profit. Like you see you're in profit and you just don't know when you should move your stop loss and profit or when you should close out the trade. Drop a 1 if you have that problem. But so this is where one of the reasons why our take profits are going to be 300 and stuff like that. And so profit rules right here. Entries between 3 a.m. and 2:30 p.m. 300 pip take profits and SLs. Secure profit once up 120 pips to 150 pips. Meaning, once you see yourself go up 120 to 150 pips, at least move your stop loss to break even, right? Or in profit 50 pips, all right? If you see yourself going up, especially if you're just beginning with this, once you see yourself up 120 to 150 pips, at least move your stop loss to break even. All right. Drop a 2 if you got that. Because this is going to be very, 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 very important, especially when I show you guys how the stacking of the strategy works. All right. Because you're going to see like, dang, I'll just potentially just call 4 entries today or 5 entries today So you want to make sure you're securing profit because all of them might not hit that 300 pip mark. And so let's say, it gets up 200 pips, then it pulls back and goes negative 300 pips. And you did it all 5 times, you just lost 1,500 pips instead of, securing a decent amount of those pips. Right? Is that making sense? Let me know if that makes sense. I'd rather secure, once it gets to 120, 150 pips, move my stop loss 50 pips in profit. I'd rather catch this 50 pips than lose 300 pips, right? So that's something that even myself has adjusted to doing, right? And so, for example, I'm gonna give you some examples of stacking, right? So what do I mean by stacking? As long as this is above the CCI, as long as the CCI 50 is above 100, you can continually stack trades, right? And I'm gonna tell you where you'll be looking to stack those trades. And so this whole period right here, when this is above 100, there's going to be something that you're going to be looking at to see if you can stack another entry as well. Okay, so now I need you to pay attention closer. So we have our entry here. This is entry number 1. When we see the CCI 6 drop below 100 and come back up above 100, as long as this CCI 50 is above 100, you can add another entry. Now, when you first start doing this, don't have more than 2 to 3 entries open at once, right? So entry number 1, entry number 2, it went back down, came back up, entry number 3. All right. So drop a 3 if this is making sense so far, right? As long as this CCI is above 100, the CCI 50 is above 100, every time this comes back down and crosses back up, and all the other rules are still applying, you can add an additional entry. Let me know if this is making sense. Drop a 0 if you are confused about it. Drop a 0 if you're confused about it. Okay, cool. Right. I'm gonna go over it again. So you understand the first entry. So the first entry, we have everything applied. 4 EMA is above the 200. 4 EMA is above 2400 EMA. We broke this resistance, and both our CCIs are above 100. There's a drop of 1 if that makes sense. Okay, perfect. Now, as long as all those other rules are applying, and you see the CCI 6 drop below, once you see it come back above 100, like it does here, you basically can add another entry. It's basically another confirmation that the market may continue going up. Does that make a little bit more sense? Perfect, 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 perfect. And so, boom. So I'm gonna give you just offer these 3 entries. This one goes for 300 pips. So that's 300 pips. This one goes for 300 pips. So that's 600 pips. This one goes eventually for 300 pips. So that's 900 pips for the day, just like that, right? 900 pips. Do you see that? Does everybody see that? Let me know if you see that. Yeah, perfect, perfect, perfect. Now, like I said before, there's going to be times where you want to secure profit. So it could be to the point, hey, you see you're up 200 pips. You may move your stop loss to 150 pips. It pulls back. Okay, it closed out. So you're up 150 pips. All right, you enter here. Boom. You get a smooth 300 pips quick. So you didn't have to you didn't have to secure anything earlier than the 300 pips. So that's another one. So that's 450 pips now. This one goes up, 230 pips. You can move your stop loss to 150. So you got basically 600 pips caught off of that. All right. So always be moving your take profit Limit your stop loss into profit. Is that making sense? Right? Always secure the profit because you're going to be able to catch multiple trades. Now, since we are doing multiple trades like this, there are chances where you're going to lose, right? So, it's important to secure profit when you can. Obviously, the more trades you take, the more likely you are to potentially catch a loss, right? But this is something where, like I said, you can be catching a lot of trades in a day and securing profit along the way as well, right? So you could have been, that's 1 entry, 2 entry, 3 entry, 4 entry, 5 entries, you know. And after a while, let's say you do catch 5 entries for the day. I mean, that's more than enough for the day, right? Because this one goes 300 pips as well. This one goes 300 pips as well. Let's say you held all three of those, right? All of them went for 300 pips. So I mean, all five of those went for 300 pips. So that is a total of 1,500 pips within 2 hours. All right, is that making sense? That's a total of 1,500 pips, right? And it's going to be the same thing for sales, right? You'll be doing the same exact thing for sales, right? I'm going to find an example. We go back to where we was that one time. All right, boom. Boom, boom, boom. So we have our break here. We see everything aligns. We get in for a sell, right? We see it pop back up, pop back down. We have another entry right here, right? Then we have another potential entry, right? But like I said, when you're first starting to do this, it's going to be to the point where you're not going to want to have more than 2 to 3 entries open at once, right? And you're going to be want to have a smaller risk per trade, right? This is where you might want to be risking 3 to 5% of trade. Because if you're risking 10%, let's say all three of those lose, okay, you just lost 30%. Now, if you're risking 3 to 5, now you might have only lost 9 to 15, which is a lot more bearable, right? But in this instance, these all go 300 pips as well. 300 pips, 300 pips, 300 pips, right? So that's 900 right there. Put a card, another entry, another entry. So that's the reason why I call it stack, because you're basically stacking entries over and over and over again. And this would be an example of where it came to an end, where you were up 200 plus pips, where you could have moved it to 100 pips in profit or 150 pips in profit and basically went undefeated for the day. Is that making sense? And so you definitely want to, like I said, continually close or secure your profit by moving your stop loss and profit. All right. Now, does that make sense? Does the strategy make sense, and does the stacking make sense? Let me know. Perfect, perfect, perfect. So now this is where we're going to use the lines, for example. Well, actually, before we even get into that, I got one more thing I want to go over. Now, there are going to be times where I want to find an example really fast. There's going to be times where everything aligns up, and there's going to be times where everything aligns up, everything does what it needs to do, and it loses, right? That's part of trading. You're never going to win every trade. That's why risk management is very, very, very important. So that's number one, right? Definitely, definitely, definitely use good risk management, because there might be times where you might lose 2 in a row, might be 3 in a row. But with the strategy, if you're waiting for everything to confirm, you're going to win more than you lose, right? You're going to definitely win more than you lose. But that's definitely important. Risk management is definitely very, very, very important, right? Now, this is an example of where everything is aligning up, but it's super close to this resistance, and you see, yeah, it gave you 200 pips, but it might not do that every time. It might just go right here and then tank. You know what I'm saying? So you definitely want to make sure it's breaking, some type of support and resistance, or the nearest resistance is pretty far away, right? Like, for example, it breaks this, this resistance is so far over here, we're not really worried about it. But as you can see, since there's no nearby resistance, how much higher it went. That went 2,000 pips and over 2,000 pips in an hour 15, right? And so that's something that you would just have to pay attention to. All right. Now what we're going to pay attention to now are the swings, right? The swings. So when it comes to the swings, what I mean by swing trades that you may basically hold a little longer, right? So when it comes to the swings, you're going to look at it like this. You're going to swing if, and I'm going to give you an example. So buy swings, all those other rules apply, but now you also want the 4 EMA to be above the 400. And you're going to take it to the next 4-hour or daily zone. So, in the beginning where we are drawing up those daily and 4-hour zones off of the line chart, you're basically going to be taking it to those zones. And then sell swings are basically the opposite, right? So you want the 4 EMA below 400 and take to next 4-hour or daily zone. All right. Basically, same thing, just opposite directions, right? And so, for example, this was our most recent 4-hour zone right here. This area right here, right? This yellow line going across. Before we got to our next 4-hour zone. Drop a one if you see that. Drop a one if you see that. So when you are seeing that, this is where you're kind of doing a, how can I put it? Since you more likely than not, you're going to be catching more than one entry a day with this strategy. That first entry, especially if it's crossing, a zone like this, can be one that you're holding as long as it's above the 400 EMA. My 400 EMA is this yellow line, right? So we get our confirmation. We got to wait till it's 3 a.m. So we get our confirmation right here after this candle closes, right? We get in, we see it pulls back, it goes back 140 pips. But now, since it's in profit, we're going to let it rock out as long as it's above this 400 EMA to see if it's going to get to that next zone, which is here, which within a day and a half, it gave you 2,800 pips, right? Now, obviously, once it gets up a good amount of pips, move your stop loss to break even, at least so it's like a worry-free trade. If it doesn't get to that next zone, oh well, because as well as you entering that one trade, you're still able to catch your stacks. You get what I'm saying? So even in between here, in between this journey from here to here, you're still able to catch trades in between. But this is just that one trade where you're swing trading, right? You may hold it for a day, 2 days, or however long it takes to get to that next zone, right? So let's say you're risking 5% of trade, right? Let's say you're risking 5% of trade. This 2,800 pips, I'm gonna just round it up to 3,000, okay? This 3,000 pip move literally just grew your account 50%. That one trade. So if you had $1,000 account, you just made $500 off of that one trade, right? If you had a 10K account, that 10K account is now 1,500 because you just made $500 off of that trade. And I'm gonna explain how the numbers work. If your stop loss is 300 pips, and you're risking 5%, and you're just saying you're just use 5% as an example. Since your risk to reward in that situation, you risk 300 pips, to catch 3,000, you risked 300 pips to catch 3,000 pips. Your risk to reward is 1 to 10, right? Because you did 3,000 divided by 300, it'll be 10, meaning you'll multiply that 5% by 10, which is 50%. So that one trade just grew your account 50%, while those other trades are just growing your account 5%. So let's just say within that day and a half, let's say you caught 10 trades, let's say hypothetically speaking, you caught 10 trades that went for 300 pips. You just grew your account 100% in that day and a half, which is amazing, which is actually insane, right? But I'm going to just give you multiple examples of this, right? So we got another example of where you could have did a swing trade, right? Get your break, it pulls up, it pulls back, boom, it would have stomped you out if you would have had it at break even, but you didn't lose money, right? So now you're just looking for another entry, you get it here, and you could have been like, okay, since I'm super close, I'm just going for this little area here, but boom. Let's say you were just on a little bit of more aggressive side and you left your stop loss at 300 pips. You never hit the 300 pips stop loss and you caught 1,000 pips. So if you're risking 5%, I mean, you caught over 15% in 6 hours, right? Solid, right? Solid. But you're going to see over and over again, I'm going to give you examples. You get this break, everything aligns up. You can take it right to that next zone. 1,300 pips, right? Right to that next zone, right? We see it. I'm finding a sell example. You get the entry, boom, 500 pips, right? You got your stack entries, boom. You see it again, get an entry here, boom, you can take it to this next zone, 500 pips, boom, right? So you're going to see it over and over again, it getting to these areas over and over and over again. We get our confirmation here. Everything aligns up. Excuse me. Everything lines up for a buy. We take it to that next zone. 1,900 pips. Let me know if this is making sense. Let me know if this is making sense. Like I said, that part might be a little bit more difficult, but it's something in the new chat where when I'm going to be dropping signals, I'm going to be saying our swing target is this. So I'll let you guys know ahead of time as well. Our swing target is this. But let me know if this is making sense. Let me know if this is making sense. Perfect. Any questions? Let me know if there's any questions. Any questions? Any questions? Another example of a swing. Everything aligns up. It comes down to our zone, 1,500 pips. Like I said, you're also catching those stack trades in between as well. All right, you're still able to catch those. So we have our initial. Yeah, so the only indicator that it won't have is that support and resistance one. For like the smaller ones on the 5-minute time frame. But yeah, all the other indicators for sure. So we'll have our initial entry here. We'll have our second entry here. We'll have another potential entry here. We'll have another potential entry here. So We got our main one that gives us 1500, right? We got this one, it's up 1500 pips. I'm at 150 pips. You can move your stop loss 50 pips in profit. Boom. We got this one, it comes down, gives you your 300. Boom. We got this one, comes down, gives you your 300. Boom. So you at least caught 2,000 pips in this day. You get what I'm saying? So definitely something. Once you get it down pat, that can be very, very, very useful. Very, 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 very useful, right? And so, um, like I said, just practice looking for those zones because it's going to respect these zones for sure. It's definitely going to respect these zones by far. And like I said, I'll just use them to basically potentially find those swing trades where, you know, you can potentially hold it to that next zone. Because these are areas that are rejected from, bounced off of. And if you're following the trend, you're basically trading zone to zone, right? So you're basically using the zones to find, those longer term trade profits, those longer term trades. So if you think about it, let's say we can get that confirmation for a buy and it's above the zone as well, right? Our next zone target isn't going to be for the swing until up here, which is right now 4,000 pips away. All right, once it gets above here, it'll be like 3,000 plus pips off of one trade, right? Even if you're only risking 3%, I mean, shoot, you still just made 30% in a day. You know what I'm saying? And so, but yeah, like I said, I'm gonna have this recording. It's gonna be in a new chat. Let me start recording now. Oops. Did I stop recording?